So have you ever wondered how a massive traditional financial company can actually compete in today's digital world? Well, today we're diving into the incredible story of L&T Finance. It's a real masterclass in how to pull off a complete tech turnaround. Let's get right into it. I mean, this is the big question, right? How do you take a company that's been doing things one way for years and turn it into a nimble, tech-first powerhouse? L&T Finance's journey gives us a fascinating roadmap for how it's done.
Okay, so to really appreciate how far they've come, you've got to understand where they started. And look, this wasn't just about making a few small changes. We're talking about a fundamental reimagining of the entire business from the ground up.
And wow, this slide lays it all out perfectly. The before picture, that was the old L&T Finance, a complicated, sprawling company focused on things like big infrastructure projects and corporate loans. They made a huge decision to pivot, selling off those divisions to become what you see on the right, a company that is almost entirely focused on retail lending, simpler, faster, and, as we'll see, a whole lot more profitable. Now, a massive shift like this doesn't happen by accident. It was all guided by one single, very ambitious plan they called Laksha 2026. You can think of this as their North Star, setting some really aggressive goals for growth and profit, all with one goal in mind: become a top-tier retail finance company. So that brings us right to the heart of it, their new focus, the retail revolution. What does it actually look like when a financial giant decides to go all in on serving individual customers? This chart here breaks it down really nicely. The biggest piece of the pie at 42% is rural finance. Yeah, we're talking about things like tractor loans. Then you've got two-wheeler loans at 28% and home loans at 22%. And this isn't random. It's a super deliberate strategy to tap directly into India's growing consumer and rural economies.
And the result of all that focus? Well, you get a number like this. Their retail loan book just crossed the 1 lakh crore rupee mark. That's not just a side business anymore. It's a massive, successful operation that proves their new strategy is working at an incredible scale. But here's the really smart part. They didn't do it all by themselves. A huge chunk of their growth, especially for personal loans, came from clever partnerships with the tech giants you see here: Google Pay, Amazon Pay, Cred. Instead of building their own platforms from scratch, they just plugged into these massive digital ecosystems to find new customers. Super efficient. So you've got this explosive growth happening. How on earth do you manage it all without the wheels coming off? Well, that leads us to their secret weapon, a seriously powerful AI-driven tech engine humming away behind the scenes. Meet Project Cyclops. Forget the fancy name for a second. In simple terms, this thing is their AI-powered digital underwriter. It's the brain that decides who gets a loan, and it does it by analyzing tons of data to make faster and way more accurate decisions, 24/7. And the scale we're talking about here is just mind-blowing. The current version of Cyclops can process 1,400 transactions per second. Now, to put that in perspective, the first version handled just 100. That is a 14-fold increase in pure processing power. That's the kind of muscle you need to scale up this fast. And like their CEO, Sudipta Roy, says right here, this isn't just tech for the sake of having cool tech. Every one of these investments is designed to have a direct, visible impact on the company's financial performance. But it's not just about approving new loans. They also have Project Nostradamus. If Cyclops is the gatekeeper deciding who gets in, you can think of Nostradamus as the watchtower. It's an AI tool that looks for risks in their existing loan book in real time, letting them spot and fix a small problem before it becomes a big one. So we've covered the strategy and the tech, but here's the billion-dollar question. Did it all actually work? Well, let's let the numbers do the talking. This right here is a huge deal for any lender. Their gross non-performing assets, which is just a fancy way of saying bad loans, have absolutely plummeted, from nearly 6% all the way down to just over 2%. This is probably the clearest sign you can get that their new data-driven approach is working. They're picking better borrowers. And of course, there's the bottom line: profitability. Their return on equity, or OE, has more than doubled, jumping from 8.2% to a very healthy 16.8%. All this really means is they've gotten way more efficient at using investors' money to make a profit. The new model isn't just safer, it's way more profitable. And that growth engine, it is firing on all cylinders. They recently posted their highest ever quarterly disbursement, loaning out nearly 19,000 crore rupees in just 3 months. That shows some incredible momentum in the market. And if you look at their own report card for that Laksha 2026 plan, well, it's pretty much straight A's. They are hitting or even beating the ambitious targets they set for themselves. They're not just talking the talk, they are absolutely walking the walk.
All right, so the turnaround has been a massive success, but you know they can't just stop here. So, what's next on the road ahead for L&T Finance?
Well, they are definitely not hitting the brakes. Their targets for the next couple of years are still seriously ambitious. They're aiming to keep growing at a strong 20 to 25% clip, push that return on equity even higher into the 18 to 20% range, and keep driving down their costs.
And get this, everything we've just talked about, that was all just phase one. They're already working on the sequel. The Laksa 2031 plan is set to be revealed in 2026, which tells you this isn't just a short-term fix. It's a long-term vision they're building on.
Which leaves us with one big final question. L&T Finance has proven that a legacy company can radically reinvent itself with a focused strategy and cutting-edge tech. So is this the new blueprint? Is this the playbook for how old-school finance survives and thrives in the digital age? It's definitely something to think about. Thanks for joining this explainer.